Okay, good afternoon. Again, my name is Dan Ujczo. I'm a senior counsel in Thompson Hine's International Trade Group. I'm here in beautiful, albeit smoky, Columbus, Ohio. Welcome to today's SmarTrade Fundamentals webinar on imports. Customs compliance is our topic for the day. This is a second in our four-part series focusing on the basics of international trade regulations and processes. During our series, we walk through the fundamentals and provide practical tips for dealing with day-to-day. Whether you're an experienced customs compliance professional, we try to, as well as brand new, or maybe this is something you've never even heard of and you just were curious and wanted to know what it's about. So we try to make this the 100, 300, and maybe a little bit of 500 level processes in there. Who's going to drive the truck today for most of the presentation is our colleague, my wonderful colleague, down in Washington, D.C., Kerem Bilge. Kerem is just one of the most dynamic people you'll meet. He's like me in the sense, not in the dynamic way, he's much more than I am, but we both sit in our international trade and transportation groups. So we work with the moving stuff around the globe and across international borders. Kerem, as you'll discover, is a native of Turkey. And has spent a great deal of time, not only, of course, overseas, but here in the United States. And so I'll quickly turn it over to Kerem because we have a lot of information to cover. We're going to move at the quick step, but we will try to make sure to really hit practical pointers for today. Now, just a few housekeeping matters. This is being recorded. You'll get the link afterwards, and it usually comes in about 48 hours after the presentation. This is general information on matters of current interest. Our thoughts and opinions expressed today are our own, and they don't reflect the opinions, of course, of our members, clients, employers, affiliates, or Thompson Hine. So basically, if you're not happy with what's said today, blame Kerem and me and nobody else. And this is not legal advice. These views are for informational purposes only. If you have any questions, please feel free to use the question box located in the control panel. It's usually on the right side of your screen. It may move around, but you'll see questions. Please go ahead and put the questions in. I will be looking at those throughout, so I even may pepper those throughout the through the presentation. And we'll have a little Q&A at the end as well. If we don't get to your questions directly, sometimes that's by design. We'll follow up via email or follow up after the session by email or phone. We are giving CLE credit today, so please be sure to complete the verification of attendance survey. A link to the survey is included in the agenda that can be found in the handout section. It looks like there's 3 handouts over there. So go to the agenda section of the control panel, and we'll also paste the link in the chat at the end of the program. And you'll get the tracking code. I'll announce it, as always, at the end of the program, what everybody sticks around for. And in the handout panel, you can also get the most famous question, I think, ever, or most popular question is, where can we get a copy of the presentation? And you can download a copy of the PowerPoint slide and bios of the speakers right over there in the handout section as well. Again, thank you for joining us today. Truly appreciate your most valuable resource, your time. And I'll turn it over to Kerem, and we'll go ahead and get started. So over to you, Kerem.
Thank you so much, Dan. Welcome to our SmarTrade Fundamentals webinar. As Dan mentioned, we'll talk about the basics of import regulations and issues that come up in day-to-day operations. So we will start with like a kind of like a background on like why this is important, and the CBP regulations and in general import regulations have a huge impact on a company's business. And any kind of non-compliances or violations may result in major financial penalties, which we will talk about at the end of the presentation, as well as any non-compliances may have a huge disruption on your supply chain, as in where you will have to change your suppliers or change the types of products you will need to import for your business. And in addition to all that, there may be a significant reputational harm to your business. as a result of a non-compliance. We can go to the next slide. I'll walk you through the agenda for today. I'll start with the general overview of the customs regulations and the agencies that administer those regulations, and then we'll go through the key concepts that really come up in day-to-day business. These include counter-forgery determinations, classifications, and valuation issues, as well as record-keeping requirements and drawbacks. And then I will turn it to Dan to talk about the CBP rulings in general and the benefits that they provide to businesses. And then I'll finish it off with a quick discussion about the post-summary corrections and protests, as well as the enforcement actions, penalties, and some mitigation measures like prior disclosures. We can go to the next slide. I guess like the first question is who administers the customs laws and regulations? Well, the primary agency is, as you all know, the Customs and Border Protection. The agency was under the Department of Treasury prior to 9/11, but they were moved to Department of Homeland Security after that. But that doesn't mean that's the only agency that is involved in import regulations and has a say in it. Depending on the products you import or the type of import you make, the other agencies may be involved, and you may need to get a prior permission from those agencies before you import certain products. For example, the Department of Agriculture may have a say in certain agricultural products, or we don't have it in this list here, but NHTSA can require a certain permission before you import at certain types of motor vehicles into the United States. Next slide, please. So just to give you an overview of a relatively recent, I guess, law that was enacted back in 1993. It was significant because it really updated the laws from the 1930s and introduced two key concepts into the statute: the import compliance and shared responsibility. And essentially, it essentially means that in order to comply with the laws, the importers need to be informed of their obligations, and the regulations and laws of customs and imports are quite complex, and that's why CBP is now obligated to provide more transparency and guidance as to its regulations and how it interprets those requirements. And as part of that, and to further that goal, CBP regularly publishes import compliance bulletins, which are extremely helpful documents that really simplify and explain what the requirements are and how CBP interprets them. In addition to that, as part of the Customs Modernization Act, now the companies are required to exercise reasonable care in complying with all customs regulations, and obviously there is not a clear definition of reasonable care, but it essentially means that the companies should not be negligent in making any declarations as to counterforging or classifications or describing the product at the entry into the United States. And importers' failures to exercise reasonable care could delay the release of a product, for example, or even in some cases it could result in the imposition of significant penalties. And that's why it's really important for companies to find the gaps in their compliance procedures and then fill in those gaps before the issues escalate and you find yourself in an enforcement proceeding before CBP. So we can go to the next slide. In this slide, we essentially try to give you a very brief overview of the entry process as a background before we start discussing the other issues in detail. Essentially, there's a two-step process when you're making an entry. First you file an entry on CF3461 document, together with all the entry documentations like commercial invoices, packing lists, within 15 calendar days after landing from a vessel or an aircraft or vehicle. And then within 10 working days after the time of entry, you would need to file an entry summary with CBP and essentially pay the estimated duties that will be applicable to the product that you imported. And then there's an exception to that, and that's called the live entry. Live entry essentially means that the importer submits an entry summary with estimated duties prior to the release of the merchandise. So instead of going through this two-step process, by submitting just the entry summary, the importer could potentially satisfy its obligations under the regulations. And then the final stage of this process ends with liquidation. Liquidation essentially is CBP's final tally of money owed to customs based on the documentations and current knowledge of the duty rates and the value of the imported goods. At the time of entry, so as I mentioned, the importer pays the estimated duties, and then the liquidation cycle is about 314 days after entry, which can be suspended or extended in certain circumstances. But at the end of that cycle, CBP reviews the documentation, and if they disagree with your classification or country of origin or any other declarations you made at the entry, they may require an addition. They may determine that an additional amount should be paid, and they will send a supplemental bill to the importer for that additional amount. And of course, during this entire process, the importer is required to use reasonable care, and failing that, there may be significant penalties and enforcement actions. We can go to the next slide, please. Thank you. So these are the kind of a list of key concepts that we will discuss today. So we'll discuss the classifications, valuations, and country of origin, as well as other items you see on the list. So we'll start with the classifications in the next slide. So again, we'll give the very basics of classification, but essentially classification is made based on the harmonized tariff schedule of the United States, which is a legal document, and the classification you choose for a product dictates the applicable rate of duty. A typical tariff code would look like this. It's a 10-digit code. The first 2 digits denote the chapter of the code, and then the first 4 relate to the heading, and then the 6 to 8 digits are the subheadings, and the last 2 digits are called the statistical numbers. In this case, it's a hybrid vehicle, so you see that like it's part of the chapter 87, which is for vehicles and parts, and then it's under heading 8703 because it's a passenger vehicle, and then the rest of the codes explain identify the hybrid vehicle and the size of the engine. And then we can go to the next slide. Thank you. So in this slide, you see basically a screenshot from the harmonized tariff schedule. The first two columns you see there are the tariff codes we just discussed in the previous slide, and the third slide is the third column is the article description. Within this column, there are detailed descriptions of goods falling under each heading, subheading, and the statistical number. As you will see in the next slide, it's very important for you to identify and determine that the product you're importing falls under these descriptions, because that's the primary determination you need to make when you're making a classification. And then in the fourth column, you see the unit of quantity, which is essentially the unit of measure in which goods should be reported to CBP for statistical purposes. And no means number, and there may be other units like kilograms or pounds, depending on the product. And the final three columns identify the rates of duty. The column named general identifies the most favored nation duty rate that will be applicable to products that are of origin with which the United States has a normal trade relations with. So that will essentially be almost all countries except, I believe, 4. And the second column identifies the preferential tariff duty rates that may be applicable for a product. And the last column, which is the second column, is the duty rates that will be applicable for products that are of origin with which the United States does not have a normal trade relations with. So right now, these countries are Cuba, North Korea, Russia, or Belarus. But there is a bill currently in Congress that if enacted, that will add normal trade relations with China. And the Chinese products will be subject to the column 2 rates as well. So next slide, please. So here we kind of list the primary sources that we would rely on to make a classification. Of course, we would start with the legal text of the harmonized tariff schedule, and that includes the tariff code descriptions, as well as the general rules of interpretation and U.S. rules of interpretation and chapter and section notes. In general, the classification analysis starts with determining the first 4 digits of the product, because according to general rules of interpretation 1, you need to make sure that the terms of the heading capture the product that you're importing. And then if you cannot determine the applicable heading, you will move on to the next general rules of interpretation and make that determination. In addition to that, obviously, the U.S. court and CBP precedents are very helpful and provide guidance as to what the classification should be for a particular product. CBP has a website that shows all the rulings it has issued, and they provide very helpful guidance for how to classify a product that are essentially similar to what you're importing at that stage. And lastly, the explanatory notes are very helpful as well. They are the official interpretation of the World Customs Organization, which publishes the harmonized tariff code and are accepted globally by almost all countries. And in those notes, they identify what type of products are included within a 4 or 6 digit tariff code, and what type of products are precluded from classifying. under that code. So yeah, we can go to the next slide. So here you see a sample classification analysis that we pulled from a recent CBP ruling. So the product is a 2020 model, a mild hybrid passenger vehicle. It's equipped with an internal combustion engine as well as a 48-volt battery that helps to restart the internal combustion engine, but does not really allow for an electric-only propulsion. So the question was if the vehicle should be classified as an internal combustion engine vehicle or as a hybrid vehicle. And in the next slide, can we go to the next? Thank you. So in the next slide, you see that we start the classification analysis with determining the 4-digit HTS number. And in this case, because it's a passenger vehicle, it should be classified under 8703, which specifically covers motor vehicles principally designed for the transport of persons. Next slide, please. And then you would have to determine the appropriate subheading for that product. So again, in order to be classified as a hybrid vehicle, both the internal combustion engine and the electric motor must provide propulsion to the vehicle. This vehicle cannot be classified as a hybrid because the electric motor does not provide any motive power. It's just used to restart the internal combustion engine. And that's why, in that case, CBP determined that the vehicle should be classified as a passenger vehicle with only internal combustion engine. So next slide, please. There you go. So in this slide, we kind of try to list some of the difficult issues that we see in day-to-day operations. A company may have thousands of imported products with significant volumes, and there may be changes in importing practices or products during a certain time frame. So it's important to stay on top of different of these changes and to make sure that you pay the same attention and make the same analysis for each product. And in addition to that, there may be different possible HTS classifications with different duty rates that would have a significant impact on the bottom line of the company. So sometimes it's a judgment call, but it's important to make sure that you have a reasonable analysis when you're making those determinations. And then most of the time, it may be hard to obtain information from vendors, or the information on the commercial invoices may not be sufficient to provide any insight as to the classification of the product. And one of the issues I think we commonly see is that sometimes importers rely on the classifications provided by the vendors, but it becomes a problem because the classification of a product in a certain country of export may not be the same as the classification in the United States, because while the first 6 digits of the tariff codes are universal, the 8 and 10 digits are typically national, and United States tariff codes significantly differ in certain circumstances from other countries. And then the classifications may sometimes be made by the brokers. And it's really important for importers to stay on top of those decisions, because at the end of the day, the importer of record is on the hook for in case of any potential enforcement actions by CBP, and it's really important to make sure that you agree with the analysis the brokers make as to the classification. And finally, the harmonized tariff schedules periodically change, and they're published by by ITC, and the applicable duty rates also change, and it's really crucial for an importer to make sure that the classifications you provide to customs is accurate and up to date with the recent changes. Thank you. Country of origin is another important concept that almost always daily comes up in import operations. So the country of origin also, just like classification, dictates the rate of duty, because based on the country of origin, you may need to apply and assess column 2 treatment for a product. For example, if it's a Russian origin, you would need to pay the column 2 rates, which are significantly higher than the MFN rates under the tariff schedule, or the country of origin analysis may be needed for to avail of the free trade agreement benefits or other preferential treatments. And in addition to that, the special tariffs or duties like Section 232 or 301 tariffs or anti-dumping or countervailing duties may be applicable based on the country of origin of the products. And in addition to all that, marking and government procurement regulations also rely on country of origin determinations. Thank you. So what is a country of origin of a product? Well, typically a good would have the country of origin in that country only if it's out of the ground, water, or mined in that country. There are different tests for FTAs by America Act, marking and labeling requirements, but the general rule for non-preferential rules of origin is that the country of origin for an imported item is the country of manufacture, production, or growth of the item. The problem is that most goods today are a mix of inputs from various countries, and in that case, you will need to apply a substantial transformation analysis to determine the country of origin of the product. And in that sense, the country of origin of a mixed of a product that consists of various inputs from other countries is the last country where there was substantial transformation. So the courts and CBP define substantial transformation as a process where a new and different article of commerce with a new name, character, and use distinct from the inputs used is created. So it's a very fact specific and it's a very fact specific analysis, and it's determined on a case by case basis. But in general, a change in name has been viewed as the least persuasive factor in determining whether a substantial transformation occurs. And for example, when the post-inform importation processing consists of assembly, courts have been generally reluctant to find a change in character, particularly when the imported articles do not go any physical change. And when the end use was predetermined at the time of the importation, when the end use of the input, then courts have generally not found a change in use as well. And finally, courts have considered the nature of the assembly, meaning whether it's a simple assembly or more complex assembly process, such as the individual parts lose their separate identities and become an integral part of a new article. Courts or CBP may typically find a substantial transformation. So in the next slide, Dan will provide more insights about the trends and maybe some projections about the future of the of the substantial transformation.
Sure, and thanks, Kerem, for doing the lion's share of the work already today. That's a lot to cover in a short period of time, and that kind of covered the 100 to 300 level, and now we'll move to the intermediate and advanced level, because one of the things, as Kerem mentioned, we've seen over the last several years now, or really starting about 16, 17, a series of issues, as Kerem mentioned, whether it was the national security tariffs on steel and aluminum, safeguard tariffs on things like washers and dryers, et cetera, and then of course the China tariffs. And what this means is all of a sudden, folks that were going to the earlier point, not much is made 100% in one country. And even if you're manufacturing or here in the United States, the subcomponents are coming from other places. And so a lot of the work that we've been doing, and certainly I'm confident many in-house customs compliance professionals and procurement and sourcing, et cetera, have been doing, is how do we avoid those 25% tariffs on China source goods or anti-dumping source goods, or we want to, in the wake of COVID, do more ally shoring, near shoring, friend shoring, et cetera. We've been following very closely U.S. customs decisions around substantial transformation around a variety of issues. Right now, there's just over 1,000 in this period of time that we're discussing. And just as some trend lines that we've seen, in 2018, it was a little bit, U.S. CBP was slow, but then as we saw the China tariffs in particular come into place in 19 and 20, we saw CBP take a very aggressive approach, that if it had anything to do with China or other countries around the world, Malaysia being one of those, that it was going to be very difficult to make a finding that, yes, there was substantial transformation in the United States or in a third country, that the tariffs would in fact apply. In the COVID and post-COVID world, we've seen a general easing. One thing I will say in that 19-20 period is it really was a call it as you see it. While CBP isn't bound to prior decisions or rulings, they tend to give those weight in some effect. It was really more of we're going to call this one as we see it. So very fluid in terms of, as a compliance professional, I was like, well, how do I use guidance from that for another product? But we did see some trend lines, and if products were coming from Mexico, Vietnam, Taiwan, they tended to have a more favorable ruling. Thailand, Malaysia, as I mentioned in particular, were less so. Next slide, please. As we sit here today, what we're seeing in terms of trend line, those countries that I just mentioned, Vietnam, Philippines, India, Thailand, Taiwan, Mexico, if the product starts there, and that seems to be a trend line. Also, it's not an automatic if it goes to China that it automatically gets bounced. We are seeing, as time goes on, CBP take a more balanced approach. If the raw material starts somewhere else, the more complex material, and they go to China for assembly or finishing, those will not be found to be from China. And that's consistent with substantial transformation. Assembly, finishing usually doesn't count, but it was just if it had the C word in there, it was going to be a strike in a few years prior. But it seems like we're actually seeing what we've called kind of rebalanced trade by reversal. So that what we're seeing in some opinions is the steel, even though we kind of know it looks like it's coming from China, the underlying steel components will come from global sources. So you'll see quotes like that. I will say, however, that there is a heightened focus on enabling technology. So if you're looking at high technology, where the PCB board, the green board, security cameras got a lot of attention there for a while. A lot of anything to do with kind of automation, AI, where that technology is actually produced will be the driving factor. And look, where there are just getting heightened scrutiny, anything in automotive, aerospace, electric vehicles, batteries, as Kerem mentioned, chemicals, pharmaceuticals, in particular metals, critical minerals, and critical minerals in particular, given, as Kerem said, there's kind of our rules for classification, but now we have an additional layer of USMCA or whatever preferential trade agreement you may be using. And then on top of that will be the Inflation Reduction Act. And then on top of that, Build America, Buy America. And so there's a lot of new rules and standards in that area. Next slide, please. And I think we can wrap up there, and I'll pass it back to Kerem, because the LI battery packs give you a great example of how that all comes together. So Kerem, I'll turn it back over to you for that.
Yeah, sure. Thank you so much. So here again, we pulled a recent example from CBP rulings about their substantial transformation analysis for lithium-ion battery packs. And in that case, the product at issue was a pack of batteries assembled in Canada, but using components sourced from various countries, including China. And the CBP has reviewed all the components of the battery packs and decided that the battery cells are the components that provide the essence of the battery module, because they have the same function and character with the end product. And that's why they said that the assembly of battery cells into battery packs does not really result in a substantial transformation, and that's why the country of origin of the final product is where the battery cells are manufactured. Next slide, please. So we'll talk a bit about valuation too. Valuation is again very important because the duties and fees are imposed usually as a percentage of the value, and the value you declare to customs has a direct impact of how much duties or fees you pay for that particular shipment. The statute sets forth different valuation methods and their order of preference. The most commonly used and the first order of preference method is obviously transaction value. And then if that is not appropriate, you would have to resort to other valuation methods to value your product. Next slide, please. So the transaction value is defined as the price actually paid or payable for the merchandise when sold for exportation to the United States. So it's essentially the total payment for the product you have made, excluding any international freight, insurance, or other CIF charges incurred by the buyer. And to the extent not included, other items such as packing costs, selling commissions, or the value of assists incurred by the buyer should be added to the transaction value. And in this context, assist means anything of value provided free or at a reduced cost by the buyer in connection with the production of the imported item. So in the next slide please. In the next slide, we'll talk about very briefly about other valuation methods. So if the transaction value is not appropriate, you can use the transaction value of identical or similar merchandise, or if that's not appropriate, then you would have to use either the deductive value or computed value. Deductive value means essentially the resale price in the United States after the importation of goods, with deductions for certain items like commissions, transportation or insurance costs, customs duties and taxes, and value of further processing. And the computed value is the sum of all materials, fabrication, and other processing costs, plus the profits and general expenses and any assist or packing cost. So next slide, please. In the next slide, we have a very simple example to kind of explain how this all works. Let's say that the company A pays $2,000 to another company in France for a shipment of toys, and then that $2,000 consists of $1,850 for the toys and $150 for the ocean freight and insurance. Company B, the French company, would have charged Company A $2,200 for the toys, but because Company B owed Company A to $350, Company B only charged $1,850 for this shipment. So what is the transaction value here? The transaction value is the sum of the total payment made for the toys by Company A plus the indirect payments that the Company B owed to Company A and waived as part of the transaction, and that will be $2,200 for that particular shipment. And because, as I tried to explain earlier, the transaction value does not include the CIF charges. So $150 for the ocean freight and insurance charge should typically be excluded from the transaction value that you submit to CBP. Next slide, please. And in the next slide, so here we kind of briefly talk about related party transactions, and that's really important because sometimes related party transactions may deem the transaction value method inappropriate or unacceptable for the customs purposes. So who are the related parties? Well, these include members of the same family, or it can also include companies holding more than 5% in any other company between the transacting parties, or any two companies that are under the common control of another company. So in the related party transactions, the transaction value is typically not viewed by CBP as appropriate unless the transaction value closely approximates the value of the identical or similar merchandise in sales to unrelated buyers in the United States, or the deductive value or computed value for identical or similar merchandise. And then after analyzing and comparing the value with these benchmarks, if the value fails the test, it's usually recommended to resort to other valuation methods for the products. Next slide, please. And here we kind of list a non-exhaustive list, obviously, of difficult issues that come up in connection with the valuation. So again, freight costs may be deducted from the transaction value, but you should have proper documentation to support that deduction. And there may be last-minute changes to commercial invoices that may not have been captured by the value you declare to the customs, and that can result in a technical violation of the customs regulations. And then in most cases, not single person or group is in the company is responsible for identifying customs valuations, and that's why it's really important to include people from finance or other departments that are directly involved in negotiating and in the transaction at issue with the customs valuation analysis. And then in certain cases, customs brokers may lack the valuation expertise, and it's really important for the companies to stay on top and oversee those decisions made by the brokers, because at the end of the day, again, the importer of record is on the hook for any inaccurate statement to CBP. Next slide, please. So just a quick summary of the drawbacks here. So a drawback is essentially a refund of certain duties, taxes, and fees that have been collected on an input at the importation. So most common drawback types include direct identification manufacturing or substitution manufacturing. It essentially applies when the input is used in a final product that is produced in the United States and subsequently exported to another country. So the refund would be limited to 99% of the duties paid on the imported input, and the drawback claims must be filed within 3 years after exportation or destruction of the final product. And next slide, please. So in this slide, this essentially identifies the record-keeping requirements according to CBP. Importers of records should keep their paper or electronic records for at least 5 years from the date of entry. And I mean, the typical records that are retained by the importers are the entry documentations filed with CBP and any drawback claims or any FDA certificates of origin for products that you avail the benefits of the FDA, and any payments made to CBP in connection with your imports. And then the next slide, please. And in the next slide, Dan will talk about, in general, the CBP rulings and provide some guidance on that.
Great, thanks, Kerem. And again, thank you again for going through drawbacks and all that other work. And valuation in particular is a very heavy lift. So thank you for handling that with aplomb. And one of the biggest issues, of course, is how do we, with all of this information, how do I know I'm getting it right? And one of the things, there is a process, of course, in the USMCA context and US-Canada-Mexico agreement, old NAFTA, new NAFTA, known as advanced ruling process, also binding rulings by US CBP, and known under different names and nomenclature depending on who you talk to. The bottom line is that there is a process that if you have a good or merchandise that you would want to check out the classification or its status under a preferential trade agreement, you like USMCA, that you can request a ruling from US CBP. You can see on the slide, you have to have a direct and demonstrable interest in the question presented. It's very common for customs brokers to file on behalf, law firms to file on behalf of their specific client, but it is the client that is ultimately receiving the ruling. It is certainly prospective, so you can't say, hey, I've been bringing, I brought this in, tell me what I should have done. Now that can maybe happen in practice a little bit, right? But in reality, you should be doing this before. That's why in most places they're called advanced rulings, and doing it in advance. And what it is it's basically a coming in and saying, this is exactly what we're intending to do. US CBP, this is what the products are. Oftentimes we not only have a description, but pictures, catalogs, etc., links to websites, safe to data sheets, etc. And here's how we think it should be classified. Tell us if we're right or wrong. They'll tell you if you're right or wrong. They don't always tell you if you're wrong, how to fix it. Sometimes, depending on the particular officer, you may see a guidepost there along the way. But you typically will get those within 30 days after receipt of the ruling request. They tend to go a little bit longer these days. But that is a solution for those that may say, look, I have a product, I really don't know where to go with this. Of course, the downside of that is you've just told CBP what you're planning to do, and if it doesn't go your way, you don't always get the guidance on how to fix it. But so there's always that permission versus forgiveness. This gets a reminder that we're speaking on our personal capacities today, but it is something to consider. If you think that you have a reasonable belief, as you heard, and in the exercise of reasonable care that you heard at the beginning of this presentation, that you're properly classifying or moving. You may not need an advanced ruling, but it is something that one can consider. We are starting to see an uptick. USMCA went quiet there for a while particularly the automotive rules of origin dispute was going on. We are seeing more and more USMCA session pick up as well. So it's just something to consider. I will just note while I'm on the USMCA topic, a question came in on, in the NAFTA context, the North American context. I've spent a lot of my life on NAFTA and USMCA. Can I comment on the proposal by US CBP to basically use the substantial transformation rules in USMs for Canada goods and Mexico? And there really is this glitch in the way USMCA was drafted and how the various regulatory requirements are drafted. And it's just a reminder for those out here, and for those that ask the question, we'll answer this more specifically onto the question. But it is an important reminder as we go into session 3 in this 4-part series about preferential trade agreements. One of the confusing parts of USMCA is you bring a good subject to China tariffs or anti-dumping duties into, say, Mexico or Canada, and then you bring it in and try to claim USMCA preferences into the US. You have to do all the USMCA analysis, but you still have to do a substantial transformation analysis under this provision. And that is held true now even for goods that are not subject to USMCA. So it's just very important that you remember that if you are dealing with something that's subject to special tariffs, that you always have to do the substantial transformation. So with that, next slide, and I'll turn it back over to you, Kerem. Nope, we can't hear you, Kerem, but there we go. Next slide. Kerem, you with us? Oh, he must be having some connectivity issues. So, one of the issues, of course, that's very common that many of you likely have to do is post summary corrections, affectionately known as PSCs. And this is really for the trade, for all of us that are out here to correct entry summaries prior to the liquidation, as Kerem previously described. There's no limit here, but the key fact is it can't be liquidated. So if you're in that period post liquidation, and so basically a year from now, just a little bit shy of that, from that date of entry, then you're not able to use a post summary correction, which is I'll be careful how I say this, but a quick fix. Then you have to go into the protest phase, and so. And you can see some of the guidelines there on the slide. I just am mindful of the time. You can, if you do get yourself into a jackpot and you need a little bit of additional time before liquidation, one of the tools of the trade is that we do ask for liquidation extensions, which delays that out a bit and it gives more time for PSC. So if you catch yourself in a situation where we've made some mistakes and we're still within that liquidation period, pre-liquidation period, then the PSC route's the way to go. And that's often, as much as we love legal work, that's often most effectively done with your broker, customs broker, working in collaboration with legal. Protests tend to fall more in our world. So with that, next slide, please. And Kerem, are you back with us?
I'm here. Yeah, I apologize.
On cue over to protest, and just mindful of the time here. We have only about 8 minutes left.
Yeah, okay, got it. So very briefly, protest is a mechanism for importers to challenge decisions made by CBP, and the grounds for protest include any issues that we just discussed in this presentation, among others. And the key issue is that in order to be able to file the protest, the entry must be liquidated, and you can file it until 180 days after liquidation. It can be filed electronically or by paper, and once you submit the protest, CBP will review your submission and make a determination based on the evidence and the arguments you presented. Next slide, please. So yeah, next slide. So here we'll talk about in general the enforcement measures that CBP can take and the penalties. Well, the first point of contact with CBP is essentially the examination and detention authority it has. Once they receive the goods, they have the authority to examine what is inside and whether that product is admissible into the United States, and if they have any issues or suspicions as to the admissibility of the product, they can detain it. And this really comes up really often in these recent days with the UFLPA law and regulations that CBP has started enforcing last year, and we expect that we'll see more in the near future. And then another measure that CBP can take is the CF-28s, which are commonly issued to importers. It's essentially a formal request for information. They typically arise during the process of liquidation. When CBP is reviewing your entry paperwork, they sometimes find incomplete, inaccurate, or insufficient information, so that prompts them to issue these CF-28s to request more information about it. And then CBP can also conduct audits on certain importers. They really select the audit candidates based on the importable volume and if they are using a specialized duty program and the amount of duties paid and their prior compliance history. And during that audit, if they discover any inaccuracies, or they have the right to refer the importer to a formal investigation, and of course they can also recalculate whatever errors they have found and ask for more for money at the end of the audit. Next, and then we'll talk about the civil penalties in the next slide here. So CBP has the authority to impose civil penalties on importers that enter products with material inaccurate information or omissions, and the amount of penalties are determined based on the culpability of the importer. Obviously, if there is fraud involved, then the amount of penalties are very significant and steep. But if there is a negligence, then the penalties will be limited to the lesser of the value of the merchandise, or 2 times of the loss of duties. And if no duty is lost, then 20% of the dutiable value of the merchandise. But these penalties can be mitigated by filing a prior disclosure, which we will talk about in the next 2 slides here. We can move to the next slide. Thank you. So prior disclosures are essentially safe harbors for any errors that you may have made in the entries. And typical examples are undervaluation or misclassification of the merchandise, or making an improper counterforging declarations. They significantly reduce and mitigate the penalties that CBP may assess as part of a formal investigation. For example, for cases involving negligence or gross negligence, the penalty is limited to interest. And even if there is fraud involved, then the penalty is reduced only to 100% of the duties owed, or 10% of the dutiable value. But the important point is that the importer must make a valid prior disclosure before CBP initiates a formal investigation, and before the disclosing parties becomes aware of the investigation. And next slide, please. The scope of the entries are typically dictated by the statute of limitations. It's 5 years, and you would file an initial prior disclosure, and then you have, by regulation, you have 30 days to assemble any additional data and then submit the final prior disclosure report. But the extensions are typically granted beyond that 30-day period. And once you're ready to submit your final report, you can either tender the payment of loss of revenue and interest to CBP with that final report, or you can wait for CBP to calculate the actual due to loss, and then you will need to make that payment within 30 days after that. But of course, once you make the payment with the final report, then you will stop the accrual of the interest. So in general, it's advisable to make the payment when you're submitting your final disclosure report. We have one more slide. Should I go ahead and finish it?
Yep, just wrap it up.
Okay, all right. So yeah, why submit a prior disclosure? It's obviously, as I mentioned, it provides a great benefit in the sense of reduced penalties, and in some cases, I mean, parties save millions of dollars in potential penalties by simply submitting a valid prior disclosure. And it also provides an opportunity for periodic self-assessment for companies. So in that sense, you would review all your important import activities that are covered by that prior disclosure, and this allows you to detect and correct any errors that you may find in addition to the initial assessment you have made, and ensures that you will be compliant with the customs regulations in the future. The submission of a prior disclosure may also result in additional time and money savings in the form of reduced legal expenses and or elimination of lengthy CBP investigations into your import practices. So this was our last slide, and I think we're right on time.
Yeah, and it's always a bummer to end on the enforcement side, right? So just on a more happy note, we're heading into the holiday weekend of Canada Day for our friends up north, and for Independence Day for our friends here in the United States, and for everyone joining us today. Again, thank you for your time. The most important part here, I think for many of you, is the CLE number. So the tracking code for today's program is TH, as in Thompson Hine, TH7198. TH7198. I believe that's getting added to the dashboard as well. Again, we invite you to sign up for the future programs. The next one in the 4-part series here will be held on July 13th on imports and tariffs and trade opportunities, looking at some of the expansion of some of the issues we talked about today with trade agreements. And if you're not getting our updates and invitations, we do have our free service called SmarTrade, 1T in the middle. So ThompsonHineSmartTrade.com. And again, that's updated almost daily, if not multiple times a day, depending on the trade development. So if you're not getting that, that gives you kind of an alert as to what's going on. And again, that's a free service that we have. So enjoy the rest of your day, enjoy the rest of your weekend, and hopefully a fantastic summer until we see you again on July 13th. Thank you again, Kerem, and thanks to all of you. Good day.
Thank you.